Welcome to the Spectrum Monthly Index webinar for September. I am Kent McDill, Senior Writer at Spectrum, and I'm joined by Senior Consultant Kathy Dordick. I'll be presenting information about Spectrum's Confidence Index in September, and Kathy will share with you key points from our report titled Investor Attitudes and Ownership of Insurance Products. 1 month ago, the Spectrum Confidence Indices exploded. The Spectrum Millionaire Investor Confidence Index jumped from 8 to 20 in August, ending a long period of low confidence among millionaire investors. However, in September, that gain was refuted as the SMICI dropped back down to 7, erasing all the gains from the previous month. The Spectrum Affluent Investor Confidence Index, which also had a large gain in August, dropped back to earth also in September, down to 6. As this chart shows, with the exception of the August report, the confidence indices have been steadily dropping over the past year. Despite the stock market growth, constant talk of tariffs and international turmoil have kept the investor confidence from climbing. Also, it is possible investors consider the record-breaking stock market numbers to be something of a false positive. A downturn would not be unexpected. This chart shows that investments in all categories of products rose slightly from August to September among all investors, with gains in both equities like stock and stock mutual funds, as well as in the safety investments of cash and bonds. But the rise is entirely a result of increased activity among non-millionaire investors. The millionaires backed off equity investments in a significant way. Investing in stocks fell by more than 4 points to 36.6%. And investing in stock mutual funds among millionaires dropped for the third consecutive month. At the same time, cash investing rose among all investors, and millionaires showed a 7% gain in cash investing and a 5% rise in bond mutual fund investing. These conservative investments show a loss of confidence among all investors. The Spectrum Household Outlook is a measure of how investors feel regarding 4 components of their household finances, and in September, it rose for the second consecutive month. This measure, too, was driven entirely by non-millionaires, who increased their overall outlook to 27.10. Millionaires actually reduced their outlook slightly in September. The outlook for household income and company health rose significantly from August. However, the outlook improvement was yet again from an improved attitude among non-millionaires, especially in terms of their outlook toward their company health. Millionaires, on the other hand, reported decreases in their outlook regarding household income and the economy, despite all of the good numbers being turned in among economic indicators. Each month, Spectrum asks investors one question related to current topics from the world of politics, government, and societal matters. In September, the question was, what is the most serious threat to achieving your household's financial goals at this time? And in September, market conditions was the most popular selection, with 17% of investors selecting that answer. This is yet another indication that investors think maybe, just maybe, the bull market is going to undergo a market correction at some point. The second most popular answer in September was political climate, which was the most popular answer each of the last 4 times the question is asked. The questions rotate on a 3-month basis, and political climate has been the most serious threat for investors since the Donald Trump presidency began. I will now turn our presentation over to Kathy Dordick to discuss our new study on insurance product ownership.
Thank you, Kent. So jumping right into this new research product we just completed, one very important thing that stood out to us in this research is that younger investors are more likely to own term life insurance, while as older investors are more likely to own fixed or variable annuities. This could perhaps be because the lower cost associated with term life insurance while providing a healthy death benefit. Another thing that we looked at is what investors' feelings and attitudes are about various insurance products. And we found that contrary to popular belief, investors favor long-term care insurance over any of the other listed insurance products. Term life insurance does follow closely behind. When looking at the various companies that a consumer could utilize to purchase some of these policies, it was very well distributed, whereas Prudential and MetLife does have the largest numbers of investors that indicated that they have a policy with one of those companies. When looking at annuity ownership, specifically those who currently own annuities, annuity owners are more likely to have fixed annuities than variable annuities. There is a notable exception to that of business owners, who are far more likely to own a variable annuity than a fixed annuity. Wealthy investors who are wanting to create reliable income streams, they're making that decision to purchase that annuity. They also are making decisions to purchase an annuity based on a recommendation from someone else. Looking at the reason why individuals purchase long-term care insurance, also this is again among those who currently own long-term care insurance, 50% of millennials and Gen Xers purchase that policy because of a recommendation. Older investors typically have purchased that policy with the desire of not wanting to be a burden on their children. Now I'm going to be handing it back over to Kent to talk about our High Net Worth Insights newsletter.
We would like to encourage you to subscribe to the High Net Worth Insights newsletter, which is available at our website, spectrem.com. The newsletter includes details on the index we discussed at the beginning of this webinar, as well as several articles of interest to advisors and providers, many of them related to current research that we're doing here at Spectrem. We appreciate your attendance to this webinar, and we hope to have you join us when we have our next presentation next month. Thank you very much.